If you are a serious trader, then volume is one of the most important indicators that you must learn how to use properly. There are many new traders nowadays. They're overly focused on reading candlesticks, and sometimes they're obsessed with memorizing chart patterns that just don't work. It is crucial to understand that whether you are trading stocks, futures, or even options, the fundamental of trading is always going to be price and volume. Why? In order for the price to move up higher, the overall buying volume must be greater than the selling volume. In other words, the buyers must be in control of the market. And vice versa, in order for the price to go down, the sellers must be in control. So if you're always wondering, how do I predict the direction of the price? Well, I also don't know myself, and I don't think anyone actually knows, unless you're Jim Cramer, of course. But analyzing trading volume will increase your chances of success. So in this video today, I'll share with you the 3 straightforward ways of how I day trade and swing trade using volume indicators. My goal today is to let you take away at least some of my trading knowledge and methods with volume indicators that you can apply to your own trading strategies and process. So here are the 3 crucial volume analysis and indicator lessons in the video. First, the volume indicators that I use on my charts and why they are important. Second, how I use relative volume or RVOL and volume indicators on the larger time frames for strategy analysis, which includes finding reversals, entries, and exits. This third lesson is going to be the beginner trader and part-time trader's favorite, as I will be showing you how to use volume indicators to find swing trading setups. I've spent a lot of time preparing my content to make these trading lessons as simple and as straightforward for you as possible. All I'm asking you to do is a free smash on the like button under the video. I really appreciate it. Lesson 1. My favorite volume indicators for trading. Let's get started with the trading indicators or tools that you need to analyze volume properly in your trading. And this applies to whether you are swing trading or day trading. So the 2 volume indicators I want you to look at are actually very simple. The first one is the volume moving average, such as this pink line here you see at the bottom of the volume chart. Just like how you can add your EMAs and VWAP over your candlestick charts, you can add this volume moving average over the volume bars down here on most of your trading platforms. This is a really quick and easy indicator to help you see how the volume trading on the current day. So for example, today you can see on this stock, this is the volume traded, how the volume trading today compared to the average over the last 14 days. Because over here, I'm using the 14-day volume average on the daily chart, as well as the intraday chart. So you can see over here that today's selling volume on NVIDIA definitely exceeds the volume. So today is a volume breakout day on this breakdown on a lot of tech stocks. Another really good example here for small cap stocks is this one, ISPO. This stock is definitely one of the top gainers on the day. You can see the volume traded on the day around like 31 million. And this is definitely more than over the last 52 weeks. You can see on the bottom of the volume chart here, there's 0 volume in the last year or so traded. But today you're trading definitely 31 million and the day before 6 million shares. So that was definitely just a really quick and easy volume indicator that you can have overlaying your charts. The second volume indicator that we're actually gonna talk about next is even better and more accurate. And this is an indicator that I only started using a lot this year, specifically for scanning for stocks to trade, which is the relative volume indicator or RVOL. Here's a very quick trading 101 for the newer traders out there. Relative volume or RVOL is an indicator that measures the current volume traded compared to a specified period. And this is perhaps one of the most important indicators to know if you're trading small cap, low float stocks. As you can see here, some of the top gainers on the day, for example, this one, ISPO, this one is one of the top gainers. On StockSci here, you can see that the stock is up 56% on the day. At one point, when it was trading at $9, that was even higher. But you can see these top gainers, especially the lower float small cap stocks, they're usually trading extremely high relative volume. So for this one specifically, now it's trading at 71 14-day relative volume. Before, during the day, I saw it at around like 40-50%. Another example here, you can see the top gainer at 167%, IMNN. This one definitely has, a very, very high volume traded as well. You can see this one actually is a huge gapper. This one gapped up from over $1.20 yesterday. Pre-market went to a high of $2.80s, pulled back to $2, and then squeezed to over $4 right before the close. You can see this one also traded really high relative volume of 230%. This just goes to show you that when you have lower float, such as on these top gainers, small cap, low float stocks over here, as well as high relative volume, really high relative volume as you can see here, when you have these two factors, that's when you have a lot of these small cap stocks that have the potential to run. And that's true on day 1 or day 2. So yeah, as you can see over here, typically when you have the higher relative volume, the bigger the range and the momentum the stock can provide. Also, just in general, extremely high volume means that it will be easier for traders to enter and exit with size without having to worry about liquidity. And that's the reason most momentum traders look to trade stocks with a relative volume of at least 2 or 3 or even more. And for small cap stocks, as you can see from the examples here, it's very, very normal to see relative volume of more than hundreds or even thousands of percent. So make sure you are including this very simple volume indicator in your stock scanning process every single day. The scanner tool I use to select stocks to trade every single morning is the one you see on the screen here, Stocks.io. This is a stock scanner that will show you all the important market data information, such as relative volume, float, insider ownership, institutional ownership, hard to borrow fees, and so much more. And all these data points you see, they are part of my trade planning process during the pre-market hours. Okay, moving on to volume analysis, lesson number 2. How to use relative volume and other indicators on a larger time frame for strategy analysis, which includes finding reversals, entries, and exits. Now that you know the 2 volume indicators I use, let's take a look at how to analyze volume effectively on the chart and utilize it to your trading strategies. So there are 3 key takeaways from this section specifically: volume breakout strategies, small cap relative volume analysis and strategies to use, and finally, volume breakdown strategies. Okay, first and foremost, let's talk about relative volume breakout on the daily chart. And this can be applied for both day trading and swing trading. In general, I always start analyzing volume the same way as I analyze the candlestick charts. I always start from the daily chart in order to see the bigger picture. And I would say for this key takeaway number 1, this relates more to large cap stocks. So you can see here on this chart example, we're on the daily chart for Tesla stock. You can see when the stock is under the 200 SMA, it consolidated for a while, all the way from beginning of the year 2024, all the way till end of June or middle of June. Now, when you finally cross over that 200 SMA over here, that's when you finally have volume picked up consistently. Yes, you had some back here in April, but that did not last, right? You can see volume broke out a little bit and really quickly sold off and consolidated below the average on the daily volume moving average. Now, what I care more about is when volume breakout lines up with multiple indicators that I use. So that's the reason on the daily chart, you can see besides the volume moving average down here, the 14-day volume moving average, I have the 200 SMA, this purple line here, as well as the daily EMA. So you can see over here, Tesla stock started breaking out in late June over here, crossed over that 200 SMA indicator. At the same time, you can see the volume is gradually and steadily breaking and holding above the average. That's perhaps the most important part. Yes, you want to break above the moving average over here, but you don't want to see volume decrease below it, just like it did back in April. So once again, breakout over the 200 SMA, also reclaim that daily 8 EMA over here. That's when you have multi-day breakout. You have volume breaking out. You also have a lot of catalysts breaking out for the stock as well. And that's when you get this multi-day breakout from $200 all the way to the resistance around 260s. Another important thing to note is that specifically for large cap stocks, when you have volume that's consistently breaking out, like you see on the daily chart, you have the stock breaking out with the candlestick chart, that's when you have the stock that could potentially trend for multiple days. Again, this is more true for large cap stocks. With small caps, it's not as consistent. That's why I kind of analyze them differently. And for these kind of large cap stocks, such as Tesla, they'll break out for multiple days and gap up multiple days. That's when I tend to apply either the gap up reversal long strategy or the trend join long strategy. And these two strategies kind of work hand in hand, and they work perfectly on multi-day breakouts. I've made multiple videos on these two strategies specifically on my channel before. So if you're interested in checking them out, I'll leave the links in the video description. But yeah, what you have to take away from here is that large cap stocks, they tend to trend. So when you have volume breaking out, you have the chart breaking out, and you add on top like a very positive catalyst, that's when you'll see multiple days of breakout on the stock. And those things together, they are the foundation of a lot of my swing trading strategies. And we're going to be talking about that later in the video, especially involving volume analysis for swing trading. Next, in the same lesson regarding relative volume, let's now talk about specifically relative volume for small cap stocks and how to properly trade them. Now we're on the fun part.
Not the boring large cap stocks,
but now we're really talking about the volatile, low float, small cap stocks. You know, I think I would compare trading small cap stocks to getting married. You can either make a lot of money or lose a lot of money. But yeah, maybe that's the reason I don't think I want to trade small cap stocks anymore. So the first thing I do every single morning is scanning for small cap stocks. So you can see on my gap scanner here for small cap stocks, the moment I see that the top gappers on the day, they're trading really high relative volume, I know I gotta be careful. In general, if you're long biased on the small cap stocks, you do want to see these kind of stocks, the top gappers on the day, they're trading hundreds or even thousands of relative volume. But now, if you're more short biased on small cap stocks like I am, I prefer to short sell them. I have a couple different strategies for shorting these kind of low float stocks. I don't want to see that. You can see that from our earlier examples, such as ISPO. You can see pretty high relative volume for both the day 1 and day 2 of the stock breaking out. And today, definitely squeezed a lot of the shorts. I tried shorting it in the beginning. I'm really glad I cut it. Another example here is SERV. You can see the first gap up day was traded, 250 million shares volume. And that's over, the amounts that this stock has ever been traded. And you can see once this thing broke out on the first day over here, this is 2 weeks ago, volume has been consistent after the breakout in order to sustain that move. You can see even though volume dropped off a little bit below the average, on this particular day, it picked back up and consolidated and squeezed to new highs. It's really rare for us to see small cap stocks having this kind of continuation like we talked about earlier, but this is a really good example showing you that you need enough volume to sustain that move in order to consolidate and move another leg higher. The strategies I will use on these small cap stocks on the long side will either be to scalp it or I do some consolidation long strategies. And for the short side, I'll wait for definitely more than 2-3 days. For example, today I tried shorting SCRV. This is now 2 weeks after. I'll wait for the first red day to trade the stock on the short side and avoid all of these volume breakout days over here, especially when the stock has really positive catalyst. Key takeaway here for trading small cap stocks with really high relative volume, don't short it on the first day or even the second day. Key takeaway number 3, we're gonna be talking about daily volume breakdown. So similar to what we just talked about regarding the volume breakout and the stock trending up higher with a catalyst, volume breakdowns can be a very profitable indicator as well. Remember, there's a saying that bulls take the stairs slowly up and up, and the bears, they take the window. They tank right away. When you line up volume breakdown along with the breakdown of some key daily support, that can lead to a sell-off intraday or even multiple days, leading to a lot of short selling opportunities. So here we have an example on the daily chart, CrowdStrike. As you may already know by now, CrowdStrike and Microsoft, they were responsible for an outage that affected global markets last week. And you can see the stock has been tanking for multiple days, going on to the second week now. Now, the stock also broke some key daily support. Not only did it break, you can see this was the day before the news. Not only did it break down this 305 daily support, over here you have another V shape down here in the 287s. It even broke down this little wick down here. That's another support area, 273. You have these multiple supports breakdown alongside with breaking down of that daily 200 SMA. I've been stalking the stock for a reversal move to the upside for 2 weeks now. It hasn't given me a good entry for the swing trade. As you see, it just keeps on breaking down all the daily support. And it's really apparent with the volume as well. You can see this huge volume breakdown. On this day, with the news, volume broke down. You can see since then, it's been consistent with the volume average after the big breakout. So you can see here, all these multiple key daily support level breakdown also, lined up, of course, with the volume breakout on the moving average down below here. You can see, once the stock, especially once it broke down the 200 daily SMA, this thing tanked with extreme volume of almost 50 million shares traded. Over here, this is the day I tried to bounce it for a day trade. It didn't work out that well as the stock later on sold off into the close. Just kept on breaking down for multiple days. And you can see the volume has been very consistent. This is, investors, funds exiting the stock, knowing that short term, the company has a lot more problems to deal with. So yeah, volume breakout has been consistent. Even on today as well, after it got fined by Delta, you can see volume breakout once again for 25 million shares. So, going back to the swing trading and the reversal trade I'm looking for, I'm not gonna look for the reversal until number 1, the daily candle shows that it's stopped the bleeding, and number 2, I need to see the selling volume kind of decrease a lot. I need to see the stock finally start consolidating at some sort of daily support. At the moment, there's no clear support yet until we see some volume consolidate below the average once again. So the lesson number 2 over here is just to get you started on understanding how to use volume to analyze your chart and show potential continuation for your longs or your short strategies. And again, this can apply to large cap stocks and small cap stocks. But regardless of what style of strategies you like to trade, whether it's small caps or large caps, just make sure you're choosing stocks to trade with high relative volume. If you're enjoying the video so far, and if you think my explanation of all the volume indicators and how to use them has been straightforward to you, then please give me a thumbs up on the video. Or if you just simply like the really bad jokes I brought back, if you like it, let me know. And if you want to see more volume analysis and trading recaps in the future, just comment trading volume down below. Okay, moving on to volume analysis lesson 3, how to use volume to find swing trading setups. I know from a lot of my recent videos on swing trading crash course or swing trading strategies that you are very interested in learning more passive and more, less time consuming swing trading setups. Because after all, I do think swing trading is more friendlier for the part-time traders or the new traders. And the good news is, everything you learned today about volume analysis, the relative volume or the volume average indicators, they are all very useful and applicable for swing trading. So let me walk you through how I use volume indicators to find swing trading setups, including entries and exits. So there are typically 2 kinds of swing trading strategies I use, and volume is a big part for both of them. The first one is the trend join continuation long for swing trading specifically. This is also the one that you heard me talk about in the past videos. For example, the Nvidia swing trade that I did after the earnings. So what I look for in this kind of swing trading is that yes, you need a big volume surge on the first gap up days. Because again, the stock is usually gapping up because it has really positive catalyst. In this case, the ticker you're looking at, Triple M, 3M company, is typically an extremely boring stock, right? It's one of those dividend stocks that people invest in. And for the stock to trade such huge volume, you can see huge volume breakout on the day, trading over 31 million shares above the usual and have a huge gap up like this. That's because it has really positive earnings and guidance for the next full fiscal year. And also, technically speaking, it's trading above the 52-week highs. So the last 52-week highs, the last time it reached those levels was all the way from 2022. So when that happens, and I see again, all the things are lined up, the stock is above the 8 above the 200 SMA, and you have a volume breakout. And in the next couple of days, I want to see the stock sustaining that volume breakout. You can see that it gapped up. Sure, the volume decreased the next couple of days, but I don't want to see the volume break down. Like I want to see it hold above the average. Then I'll take a long entry for the swing trade and adding on the small little dips. Another example here is Wolf. This is one of my past swing trades from late June that I took with my community members. We took around 430s over here, and you can see this is after the stock had gapped up with some really impressive volume. Of course, the moving average now is today's data, but back then, that was, the highest it's ever been in a while. And you can see, since the volume breakout, even though the stock pulled back, you're still holding well above the recent highs in terms of the volume. Volume has been consistent. Again, this is the volume average from now on, but volume has been consistent, trending along nicely along that 8 EMA. And we rolled it all the way up to $6, and then I got stopped out of the remainder around 530s. Not bad for a month's worth of really passive income. Again, these are just some examples here that show you multiple things lining up. Volume breakout, an increase in volume average on the daily. Again, you want the volume to be consistent somewhat, holding the breakout. And you want to see the stock trending along various EMAs such as the one I use. You can use your own, that's okay. Again, you want all of these different points to line up to form your trading thesis, especially for swing trading. Making trading plans and executing your trading thesis is all about just piecing together many pieces of the puzzle to form an educated guess. So we talked about the first setup that I like to use for swing trading, which is more of a trend join long and continuation play. The next swing trading setup I look at involves using volume breakout to find reversal entries on the daily. So essentially, I want the selling volume, everyone who want to get out of the stock, to decrease, meaning that I want to see the stock to start consolidate. So a really good example, I have to use a past swing trade I did earlier this year, is on GL. So the stock was really beaten down, as you can see, all the way from 110 down to $50 because they were being investigated for fraud. And for this swing trade, essentially I'm looking for the reverse of everything that we talked about. Instead of a volume breakout, I'm looking for that breakout to subside because the breakout indicates a new trend, right? When you have volume breakout, that's when you have stocks breaking out to the upside, or in this case, stocks selling off to the downside. So in order for a reversal for the price action, I'm looking for volume to settle down back to below the average. So for this one specifically, I left things alone for I think 3-4 days. And I only started to get interested in the reversal to the upside. Okay, I was long the stock. Once the stock has finally, you can see the volume dropped off over here on this candle. Over here, volume dropped out way lower than the first 2 days of the impact when the stock was really sold off. So you can see on the day I finally got in for the swing trade, it's trading like 1/4 or 1/5 of that volume here. And also the daily candle shows a really clean green day breakout. You can see a breakout here above the $60, and you have when the stock was closing above that previous day's candle. Also a green day breakout. And this is what I'm looking for when I'm looking for reversal trades for a swing to the upside. So for this strategy specifically, or the reversal swing, you need to find stocks that have been trending up or down for multiple days, and then look for a new volume reversal, which can indicate that the stock, the price, the actual candle could potentially see a bottom and reverse to the opposite direction. So GL is a good example. I gave you the idea of CrowdStrike. That's one that I'm still waiting on. So we talked about using volume as a supplemental indicator with other factors to find your potential entries for swing trades. It can also help you find your exits as well. To be clear, most of the time I'm using actual price targets and actual candlesticks to find my exits for my swing trades. But sometimes, especially for the reversal swing trade strategies, I'll use volume as an exit as well. So, going back to the GL example, when the stock, sold off, you have a really strong selling pressure over here the first 2 days of volume breakout. Once I got in, when the volume kind of subsided, I'll wait until I see another volume breakout to get out. And also lined up with the daily EMA as well. That's the one I use for swing trade. So if I see a volume breakout, also the stock is breaking above certain resistance and indicator, that's when I will get out, selling into the breakout essentially. If you want to see more follow-up lessons or trading recaps using volume indicators, then comment trading volume down below. In the meantime, you can learn more specifically about the relative volume indicator, or RVOL, and how to use it when you're scanning for stocks to trade. You can watch that video over here.